Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, January 20th, 2017. It's been a little while since I've done a video update on the marijuana stocks, cannabis sector, so I figured I'd do so now. There's been a really a mixed bag between some very good charts, strong performing stocks, and some that haven't been doing so hot. As I've said in the past, the cannabis sector is still considered what I consider a fledgling sector. It's only been in recent years that we've seen this building momentum with more and more states and/or countries legalizing marijuana, and I still think over time it has tremendous growth. Now, however, like any fledgling sector, there will certainly be winners and losers. Now, the winners, you have the opportunity to make many, many times on your money. I mean, some of these stocks have gone up, 1,000, 2,000% in just the last few months, and there's others that have dropped tremendously. I can tell you the vast majority of these stocks on my watch list, which we'll go over today, are penny stocks. So it's not unusual to see a penny stock go up 2, 3, 4, 5, 10, or 20 times, within just a few months. But that cuts both ways. So I've stated my preference many times in the past in investing in this sector, which is to take a shotgun approach. Or let me back up and first say, you need to determine how much of your portfolio, whether it's a long-term account, your trading account, how much of your capital are you willing to commit to, this highly speculative but promising sector. So whether that number is 3%, whether it's 25%, you make that decision. Obviously, if you're a risk-averse investor, I don't think you should have much more than 5% of a portfolio in a sector like this. But if you're willing to take a little risk, a little more aggressive, then certainly you could do more than that. So then from that point, I break it down, and I like to take what I call a shotgun approach, and that means spreading that the money, the total allocation that I want to have to the sector, which may vary over time. In other words, these stocks, some of these are getting a little ahead of themselves, and I lighten exposure sometimes, and then I add exposure back when the sector looks poised to move up. But I'll typically keep a core holding at most points in time. Now, shotgun approach, meaning I'll sprinkle a little cash in many different names. At times, I can have easily over a dozen of these stocks on my watch list that I'll cover here, and I also like to add that exposure strategically, meaning not randomly. Strategic would be on a pullback to support, for example. We'll just start here. CBIS is one stock that's actually at resistance. If you look, you can see that line there. I have to go back to a longer term chart. See, this stock has had a heck of a run up. It's quite overbought at resistance with a divergent high. I can draw it out here for you. You can look down and below. PPO is going to work out much better than a MACD on stocks with such a big move like this. So here's a stock with a divergent high. I wouldn't be adding to the stock at this point. In fact, I'd expect a pullback. Now, a strategic place to add on would be a pullback to support. I have a support level, as you can see these lines on this chart. There's a support zone right here around 8 cents a share. It's at almost 14 cents now. If it breaks that support, it has an even more or equally as a solid support shelf here. And I think that should hold on any pullback. So this is what I mean by strategically adding to these positions. You add here, and maybe add a little more here. If it breaks below that support, there might be some issues. So then at that point, you start looking, I'm more concerned about where to stop out. Because some of these stocks can and will probably go to zero again, depending on their business model and everything else. So that's CBIS, and so you don't chase it here, but maybe it continues on. And then it pulls back and it starts basing above this resistance level right now. We'll call it around 14. And at some point in the future, it might be worth adding on. Again, these are very low price stocks, and I have no doubt that some of these will go from the penny range to the dollar plus range, as that ACBFF, which was an official trade idea. We started buying that around 55 cents, and that stock, as predicted, once it got above that dollar level, I predicted it would, and that then helped the stock. They moved up to the Toronto Venture Exchange, and then the longer term fundamentals still look good. So let's get into these charts And I'll just go over the charts one by one and take a look at these stocks for those of you that are in any of these names or looking to add exposure or even maybe take some profits. So there's CBIS getting a little ahead of itself. Might be prudent at this point to either raise stops. You can take profits if you want to. Sometimes these guys can keep running. That's all up to you. Some people like to trail their stops up. But again, with the divergent high and the fact it's at resistance after such a powerful run, I would not be adding at this point, rather looking to add to that one on pullbacks to support. AMMJ, this one had a divergent high right here. Those divergences played out, and again, every line that I have on these charts, ignore the color coding for now. I haven't updated each and every one of these charts. These are all support and or resistance levels. In other words, if you have a horizontal line above price, then that would be a resistance level, and anything below are support levels. And if you look at a support level, the more reactions, when you go to the left of the chart, the more reactions that you have at that level, like this one, that 52-cent mark is a very solid support level. So again, speaking about objectively adding, would look something like this. If this stock were to pull back to 52 cents, if you don't own a position, that might be a nice place to establish a long position. You need to be a little flexible with your stops. They have these big intraday moves. These stocks move up and down fast, and therefore you get what I refer to as momentum overshoots of support and resistance levels, like we did here. Stock was coming down fast. It overshot that level intraday. You can see if you zoom in, there's a little candlestick wick there, that shadow, but yet the body of the candlestick is above that 52 cent level, meaning the stock closed back above it. So that's why you give it a little bit of room, or else you're just going to get stopped out. These little suckers swing so much. So there's AMMJ, and it may be consolidating here at this point, looking for the next move. It's almost setting up in a pennant type pattern. It's not super well defined, but this is resistance, so a break above that level would be bullish. And let's move on, try to go through these relatively quickly. TRTC, TerraTech Corp, a bunch of different lines on here, but most recently we have this sort of wedge type pattern. Stock seems to be wedging up with a little bit of divergence in place. You can see that if I draw it like this, it looks like that rising wedge is confirmed with negative divergence. So the odds would favor a breakdown of that wedge, and you can see the support levels below. I could probably add another level right here. And again, if you're in any of these stocks, sometimes I turn the levels on and show those levels. And if I don't and you're interested in the stock, then just let me know and I'll be glad to post something in the trading room, put up a chart for you. But there's a pretty solid level. And, if this one does, if that wedge breaks down, and it would measure about to that 0.225 level roughly, so that would be an objective level to add on. So the theme of where this video is going is some of these stocks have been doing very well lately. Some have been floundering for a while. We had some big run-ups when almost the entire sector, just about anything related to marijuana, cannabis, was moving up. We caught quite a few of those. I had very profitable trades, as I know a lot of you on the site did last year. So right now I'm more waiting patiently for the entire sector to set up. I think they're just sifting out, the market's sifting out the good from the bad right now. So that would be an ideal entry on TRTC, somewhere down around that level if it got there. Next one up, CANN, General Cannabis Corp. Last buy signal we had, and this posted in the trading room, I believe, was a break of this downtrend line. And you can see the rips in these things are tremendous. This was about a 650% run in just a month or so. Got ahead of itself, hit resistance. Here's that momentum overshoot I talk about. I had this resistance level / target here. Punched through it a few times, fell back. And again, these were every one of these stocks have already been covered. You can see how well defined this support level is with all these reactions back here, a reaction from below, and look where that one came back. So that offered a very objective long entry on that test, back test of that $2 former support, now resistance level, and there's that intraday or momentum fueled overshoot that I talk about. If you zoom in closely, you can see that little candlestick shadow, just showing you that the stock had such velocity or momentum going in. It overshot it intraday, managed to close right back above there, So even if you didn't want to step in and try to catch a falling knife, if you watched that intraday and you saw the stock manage to regain and close above that $2 level, especially follow through, that would have been your next buy signal. So you could have, even from there, flipped it up for, even if you're swing trading or quick trading these stocks. Personally, had I done that there, taken it long, if for a quick trade, I would have sold out at that 2.85 level, which is about a 44% gain. That's from the $2 level to that whatever I just said there. Sorry, 283, 284. Okay, moving on. CBDS, Cannabis Sativa. This one seems to be, it is working its way up. What I'd focus on, I have a lot of lines here. Sorry for the busy chart. Focus on this trend line that I'm highlighting. Comes off the lows. We have a few tags, quite a few up here recently. I could draw that a couple ways. I could also tighten it up here, move it out a little bit. You can see I can do that as well. Captures these. Let's get rid of this trend line. You can see a little better. Or, like I said, you can take it off the lows here. Either way, regardless of which trend line you use, the important point or what stands out to me is this stock put in a second divergent high, 2 consecutive divergent highs. We had a divergent high right here. If you follow on the crosshairs of the PPO and the RSI, at that point, there was a correction. Those divergences played out. The stock punched back up, made a marginal new high, and has since failed. It's down pretty good today, 16% drop. You can see at this point, this is that second divergent high. As soon as that PPO crosses down, makes a bearish cross, that divergence will be confirmed. So if I had to take my best guess, I would say this trend line is going to give way soon, and this would be an ideal scenario on this one. I would sit back tight. If you want to book profits, if you have it, it's fine. If you want to at least maybe set a stop on a closing basis or a big drop below that trend line. But a pullback down here to this support zone, these two horizontal lines, and or you have a downtrend line coming in here. So you have intersecting support levels, downtrend line and horizontal price support right there. So this would be an ideal buy signal, or I'm sorry, buy target level is right around that level. Let me give it to you. That would be the top of it comes in around 370. The bottom of that level is, no, I'll hit it over here so you can see it. The pop-up box is 356. But depending on where it happens, if we came a little lower, let's say it took until March, this is March 10th where I have the crosshairs, then it might come down and hit that trend line. That would also be one of those momentum overshoots. So there's an ideal scenario. Breakdown. It would probably get here sooner. Remember, stocks tend to fall a lot faster than they rise. But if it did, let's say that little bit of a momentum overshoot, come in, take out the horizontal supports, hit that downtrend line, backtest it, and then boom. So again, I'm talking about objective entries. So here's another one that I wouldn't be adding to now, but I most certainly would like to see that one get around that 350 level. You can see the reactions in the past as I circle them here. And if we go back a little bit longer, I'm sure there's a reason. There's that downtrend line. You can see that long-term downtrend line, which was bullish when it was taken out. And we just may need to come in. We back tested it once, but it may need another back test. So that's CBDS. Here's VAPE, VAPE, VAPE Holdings. There's an uptrend line to watch. So if you're long, keep an eye on that trend line. It may break. We didn't put it in a divergent high, but you don't have to have a divergent high. Either way, as long as it remains above that uptrend line, this stock is in a confirmed uptrend. Maybe it wants to put in another high, a marginal new high, and then reverse and go on to break that trend line. That would be a divergent high. You can see here there's potential divergence in place. So to draw it out, it would look something like this. You see the RSI come, move back down. Same with the PPO, and then you'd have, if I draw it here, this would be your divergent high. So there's a scenario on VAPE. So if you're long this one, again, that trend line could break before we get that divergent high. That's one of many scenarios. But again, here's all your support levels, these horizontal lines. And to really keep the stock, the longer term case healthy, I'd like to see it hold above this support, which comes in around the 1 cent level. CNAB, this one's chart looks distorted because we have this very long candlestick, but if you zoom in, there's been big movement, percentage gains. Not much to really say on this one. It's sort of consolidating within this level between, it's what I call no man's land, between support right here, decent support around 79, 80 cents if it gets there. Resistance above, I could probably modify that line a little bit, but that's again a stock in no man's land. EDXC Index Corp. Here's another one putting in a divergent high. As you can see here, the PPO is making a slightly lower high, starting to roll over. If the stock continues to move lower, that will have confirmed this negative divergence. I have that level there probably for a reason. That line, yeah, we go back. There's a previous reaction high. So there's a stock at resistance. It's not a very solid resistance zone, but it is resistance. There were a couple other reactions back there. So this is another one I'd wait to come back in. And here's an ideal buy point right here. I'll turn that number on for you. That's about the 5-cent level right there, give or take. Quite a few reactions to the left, and then you can see the other pullback targets. And this one, final straw, really should be this 2.5 cent level. If it gets down below there, there should be no reason for that from a technical perspective. That's probably where, depending on where you bought it. Again, a lot of these stocks, not all of them, but a lot of them were highlighted here, not too far off the lows last year. So, if you're in this one for the long run, you really don't want to see it get back below that level. CVSI, I really like this one too. So long-term hold, I like the story on it. And it's really responded well to the technicals. These are lines. A lot of these lines were put up last year. We had breakouts, breakdowns, breakdown of an uptrend line, fell down below. Here was an uptrend line here. I believe this was one of our buy signals, a breakout of this downtrend line late last year. And, that alone was about a 256% run. Ran right up to that target. You can see how well defined that resistance / target level was. I'll highlight it here. You see numerous reactions back at this point, and you never know which one it's going to stop at. There was my next target / resistance was and still is up here about 135. So far, the stock has pulled back. It sliced through a lot of these support levels. But it held like a champ right here on this support line that I had, and you can see that's defined also by quite a few reactions if you really study the chart closely, and it's moved higher since. And so now this is probably the most salient resistance level at this point, that previous reaction high around 98 cents. If and when it can take that out, that opens the door for a move up to that 135 level and ultimately around that 228 level. Again, longer term, we're talking there. CGRW, not too much to say on this one. There was a descending price channel, broke out. It may be flagging here. If you look at that, almost looks like a bullish pennant, if you will. So if it does break to the upside, it may want to run up, and typically if you have a bull flag or bullish pennant, the move is from the bottom of the pennant. You just add the length of the flag pull on there, and your next resistance or target would be up there. But again, I'm looking at quite a few of these that may need to come back in some more. There have been some that have been strong lately as I'm going through this. MJNA, this is another one, trend line to watch. Here's an uptrend line. I can change that trend line like this as well, exclude a few of these overshoots. So I would watch either a break of that trend line that way, or if I want to come in and capture that low, I'm a little more partial to this trend line. I see more reactions. So this one's testing support right now, that uptrend line. If it breaks, these are your targets. Let's turn that one on for you. About the 11 cent level. And remember, I like to step in, and if I want to go long, I like to buy just above the actual support level in case the stock tends to reverse shy, and then allow for a little bit of an overshoot. If it takes that out, you can see all the other levels down here. But longer term, and this may be months out from now, this was a big basing pattern down here the stock broke out of, and that stock needs to hold this 6 cent level on any pullback going forward. And I know that's a heck of a drop. And again, if you're in these for the long run, it would ideally be healthy to see it hold this 11.3 cent level. There were reactions back here reactions over here and here. So, personally, I wouldn't be adding below that level. I would add this at this point, but I would not add below that level. Unless, if it got back above there, that would be fine. AERO, Aero Grow International. You can see the divergent high right here, negative divergence, divergent high, broke the uptrend line. It was a little bear flag type pattern, broke down. And this one's coming up on support. This is a pretty nice support level right here around 293. If that gives way, the next really decent support, or really solid support level is down here around 216. Next one up, ACBFF. Still an active long-term trade on the site. Again, this one we're buying back here at 55 cents. We've had swing trades on this, all successful, as well as a long-term trade since that point. And it's held this 151.50 level like a champ on the pullback. Had quite a few reactions you can see there recently. And it, like a lot of these stocks, has just been trading sideways, digesting the big run-up. So we're really looking at this trading range here now for a while. It was briefly broke above there, but this is the next big move will likely be either an upside break here or a downside break, which could bring us back to test that $1 level, although I still favor an upside break on this one. CCAN. This is a low price. When you see these weird looking candlesticks, that means there's virtually no volume, very low volume. Like most of the cannabis stocks, towards the end of 2016, the middle to the end, there was a lot of hype and a lot of buzz, so you did see volume pick up. This isn't my favorite downtrend line because it excludes a few of these levels where prices punch through, but it is one to watch. And you can see this stock trades in a series of downtrend, breaks out, runs. Downtrend, breaks out, it runs. So you could watch that break for this of this downtrend line. There's also some resistance there around 70, and that could run it all the way up to any or all of these levels. But again, this is a very low price stock, 6 cents a share. So just be careful with it. Cara, this is a pharmaceutical company. They have other drugs, but they have at least one. Talked about it many times. Marijuana-based drug. This was a symmetrical triangle pattern. Stock broke out, back tested, and has since been moving higher. That's the next target up there, 1335, and then ultimately 1810. This is a long-term hold for me, and I'm willing to ride out some pullbacks. But at this point, I really would like to see the stock hold this level here, 862. Let me put that as an orange line. Call it 860. That level should be contained on a pullback to keep the longer-term bullish case intact. GRNH, Green Grow Technologies, divergent high. You can see with the red line, there was a correction following the divergent high, and it's moved back up. And again, these stocks trade very well off the technicals, so a lot of these do. You can see these levels. Most of these were put here in advance. So this one pulled all the way back to that 5-cent share level, hit it almost, looks like to the penny, and then reversed. And so far, and again, these levels, I believe all these levels were here in advance of this correction. So it grabbed support there. I mean, it even grabbed support at that other level here, bounced pretty sharply, hit this level, pulled back down, and that's where it finally found support, and it's been in an uptrend since, but it ran smack into that 0.1180 level, almost to the penny again, and has since stalled out there. So hard to say where this one's going near term. It's certainly in an uptrend for now, but those are levels to add to on pullbacks, or a breakout above that level would be bullish, and this would be your next upside target. SGBY, Signal Bay Inc. Nice volume coming into the stock on this one. Heck of a run. This gives you an idea what these things can do. There's what is that? 13,589%. So 13,600% gain on that stock. So you can. Like I said, a little bit, sprinkle a little bit of cash. It doesn't take a lot. Even if you have a small account, $100 in a stock that goes up 13,000%, I'm sorry, what did I say? Yeah, about 14, depending where I grab that. Yeah, 14,000%. You're going to do well. And again, who would have known at that point that that's how much that stock would go up? But these were levels. If you can see here, there was a lot of reactions back here. That was a target. Here was the looks like the all-time high in the stock. That would be the next target. And this is a support level so far that it's holding. And if it came back in, this would be my final add-on point right here, the 1 cent mark right there. So show value. I don't know why it's saying half a cent. Oh yeah, 0.005, half a cent share. So 0.005. Divergent high rising wedge when that thing broke down. So that one might have a little more downside, although it is at support now. So that technically is a strategic entry, maybe with a stop below or a partial position. Then you add here, you add a little more here. You make your final addition there, but if it goes below there, then I'd be more concerned about stopping out somewhere a little bit below there. MCIG, beautiful looking chart. It has this history of these downtrend lines, breaks out, runs up, another downtrend line, breakout, and this one just exploded from there. Came back in, worked off the overbought conditions, and ran up. I must have that line there for a reason. Yeah, we go back to the left. What I did is I clicked to a 2-day chart, which then gives me 4 years of price history. And you can see the reactions from above, reactions from below, and that's exactly where that stock stopped recently. Divergent high, so I certainly wouldn't be chasing this one here. Let's draw that out for you. You can see the negative divergence. Price is making a higher high against the PPO making a lower high, as well as the RSI. So this is one that I'd be more concerned about taking profits or raising stops than buying at this point. However, this would be an objective add-on level here, which is about 22 cents a share. And then any of these levels here. There's a big base that it broke out of. Again, that's why these stocks look good longer term. This was a basing pattern. Stock broke out and just ripped. EAPH, bearish rising wedge, negative divergence. I would not touch that one with a 10-foot pole right now. I'd expect that to break down. You got to be careful shorting these things too, you know, because they can move up so fast. They're also capital burners. If you guys know what I'm talking about, if you short this in a margin account, the margin requirements on these low-price stocks are so much it'll burn up a lot of your buying power. You know, occasionally if one of these just screams short to me, I will, you know, take a short trade on it. But you gotta, like I said, if you don't know what you're doing, be careful, because these guys can burn you if you're caught on the wrong side of it. Really long or short, it cuts both ways. But there it is, bearish rising wedge. These are targets. This is where I'd look to step in and buy. That's the first support level here. It's about 2.36 cents, and then the next one here is about 1.84. That looks like an objective area to add, although that's a pretty steep wedge, and it wouldn't surprise me if this one came all the way back here to my former target zone. MCOA, Marijuana Company of America, broke this trend line, seems to be moving up. So here's another one not too far off its highs, and you know, still, you know, since last year, you know, here's a stock that's run up. What is that number? 100,859%. So again, you can get the gains on these things can be phenomenal. Like I said, there'll be winners and losers. So just spread it out. And if you're willing to ride out the bumps and be pretty liberal on your stops, I think a lot of these will pay off in the long term if you have patience. DEWM, Dumar International, very nice support level here. The stock seems to find this level. It's had a few washout moves, stop clearing runs, whatever you want to call them. But this is where you look to buy this one down to this support zone, which runs all the way down to about 0.0017. Up to about 0.0018. So you buy there, and he has a history of hitting that level, popping, come back down. So there's where you want to accumulate the stock with a stop not too far below. But this can be a tricky little sucker, because, like I said, they've had these a few occasions where the stock has had these flush out moves, and that would pretty much take out your stop, especially these two. Maybe not this one, but these other guys. So. Again, stock that appears to be going nowhere, but it's certainly a swing trading candidate. And at one point, if it starts to clear these previous reaction highs, then the longer term picture might firm up. PHOT, Grow Life, downtrend line breakout. It rips, downtrend line breakout, back test. So an objective entry would be on a back test of this downtrend line. However, I need to add this. Definitely see a pretty solid and significant resistance level here. So I would not buy that back test to that downtrend line. I would wait for a break. Oops. I would wait for a break above the 2-cent level, convincing breakout above the, I'm sorry, yeah, that is 0.02 2-cent level. And then at that point, your target at least would be that previous reaction high up around almost 6 cents. So you can do the math. That's about a triple on your money if it gets there. ENRT, Intertopia Corp. Bearish rising wedge pattern breakdown. Here's another uptrend line. It broke down, but the stock is powering back up. This is resistance, certainly resistance. Quite a few reactions, even if you look to the left of the chart. That's around 5 cents a share. So that would be an area to take profits. Also an area, if it breaks above it, that one can run. And I'll have to look at the chart. I could tell you probably go up to at least that 7.5 cent level over time. So there's one to watch. OGRMF, this one just recently broke down below this fairly well-defined uptrend line. You can see all the reactions on there. So it's broken down. Although the action's been relatively muted, it hasn't really had a powerful sell-off since then. There's a couple of support levels. I think if this level gives way, which is around 175, that would open the door for a sell-off. And this is a great place to step in and buy this one objectively. Looking at the charts is right around, call it, let me turn it on for you. About 1.03, about $1.03, very decent support, and that would about be in line with where that correction should go. You can see the divergent high. I didn't have it drawn out. I'll draw it out for you right here. Negative divergence, what the price is making a higher high. Breakdown. So again, there's another one because of the divergence and the fact it broke down below that trend line. I'd be watching it. I wouldn't want to step on it this support level. I'd be watching that unless it holds and the stock continues to move up and burns through all these divergences. But I'd rather buy this one down here around 103 if it gets there. A few more to go. SPRWF, trend line, uptrend line, negative divergence, breakdown. And I can just tell you there's a very big support level all the way down here. That'd be a heck of a correction. There's other support levels along the way. I'll add the lines for you, but I got to keep moving. This video's getting a little bit long now, so I'm going to go through these quickly. MQTRF, there's an uptrend line to watch if you're long that one. Break of that uptrend line would be bearish, and some decent support down here around the 325 level. EMC.V, that one just sort of had virtually no volume at all and then exploded recently, shot all the way up here from the 7-cent level to the $4 and change level. So there's a 6,200% gain in just about a day. I guess it was one day it popped up there. TBQBF. Uptrend line to watch, divergent. Yeah, no. If it puts in another high here, it will be a divergent high. Either way, keep an eye on that trend line. If it breaks, this is one area to buy. Here's another support level. You can make out the prices to the left here. But let's go ahead and move on. Very thin volume on that one. CHUM, Chuma Holdings. This thing seems to be basing here and really needs to get above this let's put it here, this previous reaction high. So I don't really have an interest, very thinly traded stock, until and unless it broke out of this level. And something that I should mention too is keep an eye on the sector as a whole. I have this watch list. What I'm doing, you haven't seen it, I have a watch list over here. I look at it every day, and it gives me a pulse on the sector. Since we don't really have an ETF tracking the sector, I saw some company was coming out with something, but I don't think it's very representative of the sector so far. So I watch this whole thing, and I'm I'm waiting for the next big setup in the sector, the bullish run, and when that time comes, I'll definitely let you guys know if and when I see it. All right, there's that line that I talked about here is about 8 cents a share. Well, I already had the value, but you couldn't see because it's down. Oh, there's a good point to bring up. Here's a downtrend line coming in on this one. Flipping back to that 2-day chart, and that level's around 8 cents a share. So this is what I like is the fact we have intersecting resistance levels. So if the stock, let's just say, bounces around for a few months, finally comes up here, this would be an excellent and very objective level to go long if it broke out both the horizontal resistance and the downtrend line, and that would easily pop that one up to this next target level I have up here, resistance level, and that's good for about a 76% gain. That would take you up to about the 14.3 cent level. And ERBB, these are levels to watch. I've got to wrap this video up. There's so many of these stocks on my watch list. TWMJF, Canopy Growth, looks like it's sort of forming this triangle pattern. Break of that will determine the next direction most likely, and this, if it breaks to the downside, here's your level. You want to step in around 553. That's pretty decent support. If that doesn't hold, next one's around 422. MJN.V, PharmaCann Capital Corp. So here's another one. Maybe they finance cannabis companies. That's what I'm assuming. Watch for that trend line break. There is negative divergence setting up in that one, so trend line break would bring that stock down. Here's your targets. 135 would be your first support, an objective level to step in, and all the way down to 67 cents. And again, just depends on what the sector is doing as to where or when I'll step in on these support levels. This one, APHQF, is in this ascending price channel, flirting with the bottom of the channel. Pretty decent support here around 312, 313, and if that doesn't hold, then the next objective entry would be around 250. ATTBF, that one has a pretty decent support here around 0.88, so call it 9 cents a share. 9 cents. You can buy at that level with a stop not too far below. Every now and then they'll run those stops. Like I said, you have to give them room. And if it, so it's really trading in this range. That's a bigger picture. If you look at it right now, it's in what I call no man's land between support and resistance, these two lines. So if you buy it down here around that, what did I just tell you, 9 cent level, you could hold it and ride it up to that top of the range, which is around 18.5 cents, or wait, and sell there, or wait for a breakout above that level, which would be longer term bullish. This one's very thin, so not even worth talking on, although I will say there's a support level there to watch if you're in that one. THCBF. IIPR, Innovative Industrial Properties, Inc. So this one's a REIT. Here's another example of diversity within the cannabis sector. This one, and I'm looking at another monitor, Innovative Industrial Properties, Inc. focuses on the acquisition, ownership, and management of specialized industrial properties leased to state licensed operators for their regulated medical use cannabis facilities, blah, 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 and it goes on. So there's one that's an indirect play, if you will, in the cannabis sector. New company, not a lot of charting history, so I can't really give you an opinion. You can see there's only a few months of charting history, so I usually need to see at least 6 months, preferably a year or more, to really be able to identify trend lines and support and resistance levels. All right, this is officially the longest video I've ever done, but a lot of stocks in the sector, and I wanted to cover them all. Hope you enjoyed it. This has been Randy Finney with Right Side of the Chart.